We are having this special chat today with an investor who actually looks at the long term while investing and have made some very successful calls in the last decade or so, built businesses, taken successful exits, and have made very good returns for the shareholders, and perhaps we'll be able to take help from these insights and improve our own investing strategies. We have with us Managing Partner of Everstone Group, Mr. Dhanpal Jhaveri. Dhanpal, thank you very much for your time and chatting on, with ET Now today.
Thank you, Ajay. Thanks for having me over.
Dhanpal, I am tempted to talk to you about the NBFC space. You made some very successful calls in the last decade or so, are still invested in some of them. This Indostar was one IPO, Leyland is where you've made Leyland Finance, you have stake. Let's start by understanding the NBFC space. It's very hot right now. Some say that best of the returns are already made. What are your thoughts?
You know, the point you make about, the NBFC space and being a hot space, we actually believed in the long-term bullishness of this opportunity, because capital as a commodity is the core ingredient around which you see economic activity. And there are two primary purposes that capital basically fulfills. One is to help businesses grow, and second is to help consumption. And we think the opportunity in India around both is very, very large. The NBFC space particularly, we think that because they started out with a disadvantage against the banking system, that they do normally have a higher cost of capital, their focus has always been using entrepreneurial and very strong processes and technology to go out and build niche customer segments where they go and address a requirement of a particular type of a customer or borrower, as you may call it, and go and basically figure out how to actually solve their problem by providing capital at a cost at which they can basically also be profitable.
So when we talk of NBFCs or your own investment experience, which segment do you see more opportunity? Is it B2B, where SME or equipment finance, etc., are actually taken care of, or is it B2C, where consumer related needs are? Where do you see more potential?
So we have been fundamentally quite conservative, and we generally a little bit risk averse, and therefore we've always felt that the best way to create value for you as a lending business is to go and offer that capital to people who will use that capital to multiply and create more value for their own businesses. So business to business is for us really where the real opportunity has lied, and where we've been most comfortable putting capital to work. So if you look at both in Indostar and to a large extent in the Hinduja Leyland Finance business, that both businesses have been largely focused on going and creating a large set of customers who use the capital to grow their own businesses. Indostar has particularly created from what we call a B to mid-B, right, middle size to large size businesses which are requiring our capital, to going and slowly graduating to B to small b, and even now on the commercial vehicle side, where we think is a very, very exciting space, especially given you seeing what the tailwinds are in the industry as a whole around growth in logistics, growth, in industry because of the GST. We think that these businesses offer long-term opportunity to create value.
What about housing finance companies? We understand that over 100 new applications are in the pipeline and will get licenses. Housing finance companies led by the behemoth HDFC, of course, has done phenomenally well in the last 20 years for Indian markets. What are your thoughts there?
Housing, first of all, what is the basic purpose of a house, right? It's consumption. If you think about it, in India, beyond consumption, it's also a savings product. Most Indians, one of the first things they aspire to do, if you look at two large purchases that they ever make in a lifetime, is around a house and a car. We do think that housing per se offers people the ability to fast forward an opportunity to have a better lifestyle through a product which they can pay for it over a long period of time. So we've always believed that housing is a very interesting space, but at the same time, given the nature of that particular product, it's always been also a very low spread and therefore a very difficult product to create unless your cost of capital is something that you can really work with. What's happened recently, I think to a certain extent because of government programs, which very clearly have focused on making housing a much more industrial product as compared to what used to be an unorganized industry. The RERA application or RERA regulations which have come into play, and I think the availability of credit through, like you said, lots and lots of housing finance companies coming up to basically offer that as a product is something which we think drives demand across the next 5 to 10 years for this industry. It's no different that we've seen in other global markets. I think, like I said, being a core consumption product, someone who would want to buy and want to basically use it as savings is something that we continue to believe has long-term strength. The challenge, again, I keep coming back to, is the business of lending is really about collections, not about disbursement. And whenever we think, and terms such as hot sector, it's a great business to be in, when everyone basically attaches their last name to the business and starts creating a new company around it, is when also we think the risk starts getting built in the environment. From our own perspective, we think the right way to build businesses clearly is execute well and make sure if you're doing a lending business, you focus on collecting well. So that, having said that, I do think that these are businesses which offer large opportunity over the next 10, 20 years.
Superb point. Dhanpal, the other area where you have very successfully been around is the QSR space by way of Burger King, and Zorawar Kalra Association has also been something which you've done, the Farzi Cafe and all these investments which they are making. In the listed part, there is McDonald's India, Westlife, and there is Jubilant Foods, which got Domino's. So people want to know that how is the QSR space looking right now? Investors are wanting to understand what are the trends of growth which this space offers. What's your own research tell?
So as you think about the way urbanization is happening in India, right, over the last few years, and especially what we see happening over the next 10 to 20 years, plus a focus really on creating urban agglomerates where basically you can see a massive amount of activity, commercial activity taking place in these markets. There is also along with that, an opportunity to basically make food from what used to be historically a occasion based
to a daily use kind of,
to a more convenience based experience. And the role of QSRs in that has been very, very instrumental. Also, if you look at from a business perspective, I think the formalization of the economy, coupled with the fact that there is a more level playing field being created between mom and pop restaurants and organized restaurant businesses, I think the costs, the friction costs of doing business are coming down between the two. And that also, therefore, is levelizing the playing field for QSRs to come in and basically create a very simple, standardized value product in a convenient form to the consumer. So we actually believe that the QSR business has hit an inflection point where over the next 10 years, urban India is going to drive a lot of the growth for the QSR industry.
Superb. I also came to know that you've just raised a new fund, which will be actually kind of a green fund, and it would be investing in waste management related opportunities, water management and renewables. See, we've been speaking about renewables for some time now, but as a private equity investor, I am keen to understand from you, how is the commercial opportunity over here? Because at least in the listed side, investors don't have very great experience.
Look, you've hit the absolute, term, as I call, critical to basically take a decision on business, which is commercialization. I think the opportunity was always there because India is an energy-starved country. The clear need to basically create more generation capacity in the country, which will meet energy requirements. We've always lacked both from a peak demand and a base demand in terms of electricity production and the whole value chain in terms of transmitting it and finally making it available to a consumer. On the renewable side, the challenge had been historically that a big part of the renewable ecosystem only operated if you created a subsidy program around that renewable ecosystem. And that per se, for people like us, right, who are commercial capital providers, we find it a challenge because always you could have subsidies being pulled away, and therefore then that completely, I would say, collapses the business model. So from our perspective, we saw the evolution of the industry where it's got to today, where both major forms of renewable energy, solar and wind, are available and are capable of providing energy at commercial rates without any subsidies at all. That's when we believe, again, is an inflection point for industry, where the opportunity to go and build large scalable platforms in renewable energy is very real and is something that we think will be the right way to kind of grow as the economy continues to need more energy going forward. Our strategy in our green fund, which is the GGEF, is really not just about building real assets in the form of infrastructure. but also going and building and overlaying what we call infra tech on it.
Okay.
We think as you build more capacity for various types of requirements, there is a need also to overlay using technology, processes, systems to improve efficiencies around these capacities. So energy efficiency is a big theme for us. The whole value chain within the energy production ecosystem, again, is a big theme for us, providing all kinds of value-added services, not just real assets. And so we remain very, very excited in terms of what we think we can do. The other big opportunity is clearly what we see is the electric space. So besides energy, we think the world is also, as part of our decarbonization strategy, is going to move more and more towards electric as an option for transportation. And this is, again, we think, as the cost of delivering electric vehicles and electric transportation comes down, will become more and more viable as an alternative to our ICE, which is the internal combustion engine, as a requirement. So we again think that these are irreversible trends. Clearly, as we go forward, there'll be a lot more technology, innovation, and as a result of that, commercialization of these opportunities. And this fund wants to be at the forefront of that.
Dhanpal, everybody is always in awe of the kind of returns which private equity investors make. But they actually don't pay attention that they also, investors stick around, private equity investors stick around perhaps for longer periods of time. How do you think individual investors can bring private equity approach and become better investors? One, in terms of assessing risk, and two, to have long duration of holding periods.
Look, first and foremost, I think, yes, there is a long-term approach to private equity, largely because we focus on what we call as creating alpha in the business itself. And this alpha gets generated over 3, 5, 7 years, sometimes takes even longer. And that's partly driven by the fact that underlying businesses which we invest in are exposed to all kinds of what we call as today, much more so, kind of a VUCA world, right? It's volatile, it's uncertain, there are lots of ambiguities around where you build businesses, and therefore one has to have an operator mindset when we go in and invest in these businesses. Our view therefore has been not really as much about what the strategy the business has, because if you really are exposed to a business which is what we call long India and long Indian consumption, really there's not much strategy. It's about how well you execute on the ground. And it's a lot of times as simple things like making the product available. In India, just the friction cost of taking your product and going and making it reach the consumer itself is a huge cost. And if you can build efficiencies over there, there's an opportunity to make that cost available. And second is that the Indian consumer is a very evolved consumer. And therefore, their focus on them is really not about what they essentially are buying, but also at what price they're buying it at. Therefore, it's a quality consumer with value focus. So all of this, when you're trying to build businesses, and which is what we do from a private equity perspective, all of this needs to be baked into 3 ingredients, as we call it here. What is the secret recipe here? There's no real recipe as such, but one large opportunity. There is a large market opportunity in that particular space that we want to operate. 2, make sure you've got the right team over there on the ground, which is going to execute to a plan that we all agree to. And 3, finally, capital clearly we think can be a big differentiator in a lot of businesses. Bring in the right kind of capital, which is patient, and therefore in that sense long term, and can give enough runway for businesses to grow to their potential. And that our kind of, it's a fairly simple mantra we applied in businesses that we buy and build, or businesses which we build from scratch.
Consumption is the one area where you are quite bullish on, and consumption is such a big theme in India. Do you think, which are the segments or categories which hold potential in your view? Is it food? Is it the urban luxury side? People are climbing up in various categories up the chain. Talk to us a little bit about that.
So I think you can actually slice and dice consumption in many ways. And for us, consumption is a very wide definition. It includes even, healthcare, it includes education, it includes even, financial services, because ultimately all of these things are things which people consume, right? If you look at a consumer's wallet, education and healthcare are the 2 biggest spends, right? If you think about buying a house, like I mentioned earlier, it's the largest consumption or the asset that typically most people end up buying in their lifetime. And therefore for us, where we look at again is not really a broader, because we think you pretty much need anything of everything, is within that very small space or niche that you're operating, is there a large opportunity to create a business? So our fundamental thesis is really that let's go attack it more from an execution perspective rather than necessarily from a strategic perspective. So top sectors have always been things like healthcare, things like financial services, things like, I would say products which are both discretionary and non-discretionary, services which are discretionary, non-discretionary. So we've been big investors in the QSR industry, as you know.
Yeah.
We've built Burger King from scratch over the last 3 years. We've taken it from 0 to 140 plus outlets. If you look at on the healthcare side, we built one of the largest hospital chains, global hospitals, and brought in Parkway as a investor in the business. We look at education, S. Chand, very interesting business. 70-year-old company partnering with a very high quality entrepreneurial family, and went and used both organic and an inorganic strategy to scale the largest education content company in India. And not only that, even though it's a print business, we've gone and built significant digital businesses inside that company. So one of the key things we've also learned as a business is that while you do a lot of things, building offline is clearly a big way to build businesses in India. But the digital space is something that fast will become an enabler. One, to first reduce costs and build efficiencies in businesses, and two, to start using it to address market opportunities, to go reach out to consumers who otherwise through an offline strategy may not be easily accessible.
You mentioned hospitals. There's a large hospital deal which has just happened after quite aggressive bidding by some of the finest players, not only locally but from abroad as well. What are your thoughts on hospital business? Why is it that in the capital market, hospital stocks have not really made huge returns over the last decade? On the private side also, there are not great deals which have happened in the hospital side. Why investors not really come in here?
Well, I partly disagree that the great deals have not happened. I think there are a lot of good investments which have taken place and people have made money in the sector. But broadly, if you look at it, it's a social infrastructure business. So one has to think very carefully about whether the business is profiting or profiteering. And I think that fine line in a democracy like India, one has to be very, very thoughtful about as to how do you build these businesses. Two is, building hospital businesses is very challenging because you're building large infrastructure up front. All the capex goes in. First, the time required, like I said, generally in infrastructure businesses has taken longer and it's been more expensive to build any kind of infrastructure asset. Two is, once you build that asset, then you need to basically fill that asset, right? With people and customers and patients, etc., kind of walking into the door to kind of provide the fill up required for the business to generate returns. That cycle, it tends to be, like I said, longer than one expects, and therefore returns historically therefore have not been to the same extent at what one would expect at the planning stage. Having said that, I do believe as India, increases in terms of its per capita income, as India has the ability to afford better healthcare, and I think a lot of the innovation which is happening in the space, right? Whether you look at life sciences, where Indian companies today are world leaders in terms of building high quality pharmaceutical products at very, very competitive prices. I think you're going to see a similar revolution on the medical equipment side, where as newer businesses come in to basically provide devices, equipments, etc., to the hospital industry, the cost of delivering healthcare will overall be much, much more competitive. It's already a very competitive place if you look at global standards, and I think it will continue to be a very, very competitive place to provide affordable healthcare. So our view long term continues to remain India will be with a 1.3, 1.4 billion people will need better care, better services on the healthcare side, and we think that if you are smart about, again, it all comes down to execution. How well can you execute on the ground to mitigate some of these risks which are there associated with the industry? And at the same time, how do you make sure you make it available at an affordable price point is where really we think the edges and the opportunities in the healthcare space.
Okay, let me put you into spot now. Tell us about what are the juicy deals you're eyeing, which are the sectors you're analyzing right now to deploy capital, any companies or categories which look very attractive right now?
So first and foremost, juicy in India, unfortunately, nothing is juicy, right? You have to work hard at getting anything done, I think, or you have to be extremely lucky. We think we have to work hard. We don't think we are lucky, and therefore we have to basically focus hard on terms of how do we create the right deal construct for ourselves. We are very value conscious buyers, so we tend to therefore do a lot more work before we can get an investment done. Last year, for example, we've been relatively quiet. We haven't been putting too much investment dollars to work, largely because we did feel that the opportunity in terms of the returns which were there in businesses and the value at which they were available, the risk rewards were largely lopsided. As the markets have corrected a bit, we do think that the opportunity clearly is now resurfaced for private businesses like ourselves to go in and create interesting investment opportunities. Spaces remain the same. We continue to like financial services. Credit in that clearly is an interesting space. Insurance continues to be a good space. Asset management is another space where we continue to believe that long term, with what's happened on both the digitization and formalization, savings moving from physical to financial assets, that whole financial services cycle, I think, has strong tailwinds behind it.
So the latest addition to the listed space is HDFC Asset Management Company. Great company, great pedigree, investors got rewarded. Reliance was the other one which got listed. Are you looking at this space closely? Is there anything available on the unlisted side and the private side?
So I think there is limited opportunities in that space, and I continue to believe that one has to take a very long-term view to building such businesses. I think the trend is very clear. We are not seeing anything that is exciting enough for us to basically go and say let's do something. There are clearly some platforms which are being talked about in terms of being available for sale. I do think the delta between value to build and the value to buy continues to remain quite high. So we continue to explore, but we haven't got anything which we can say is imminent. I would say the other large opportunity is there are lots of business services today in India. As companies wanting to be more competitive, focus on their core business offering and really want to outsource everything which is non-core to them, there is a large opportunity to build what we call B2B services, businesses which are servicing other enterprises and for all kinds of non-core activities. That's a space which we think is very interesting.
I think SIS comes close in that. It's a listed
So we've
company.
seen some great examples, whether it be Quest, TeamLease, SIS. These are all businesses which have kind of scaled up very rapidly. But again, we think that we are scratching the surface in terms of what can be done in those sectors. The third area continues to be, like I said, the whole consumer and the consumption, discretionary consumption opportunity. We've been kind of looking at several investments. We haven't closed anything for various reasons. And I would say the big pie is what's happening in the banking sector and the stress in the banking sector. There are lots of very interesting businesses which have broken balance sheets because of just indiscipline in terms of managing capital, just indiscipline in terms of the way they manage the business. But there are good fundamental, interesting operating businesses which one can carve out or extract from this, what I call a broken balance sheet, and then recapitalize and basically put on a growth track again. So we are also looking at that space very opportunistically, I would say, and it's something that we continue to believe will offer us long-term investing opportunities.
All right, Dhanpal, on that note, we'll let you go. Thank you very much for your time. I'm sure my viewers and our viewers of the channel will really enjoy the insights on the various sectors which you spoke about. Thank you very much for your time.
Thanks, Ajay.
Wonderful. Guys, with that, it's back to you.